Okay, Fred, we are live. Welcome everybody to Wall Street Reporter's next Super Stock, a live stream for today, December 10th, 2020. We have returning with us our next Super Stock presenter, Skylight Health, SHG on the CSE, SHGFF. That's the new symbol on the over-the-counter. Prad Shaker, the CEO. Prad, welcome back.
Jack, so glad to be back. If you give me 1 second, Jack, I have something here. Just 1 second.
Oh, you're gonna surprise. This is
called a special jacket. Actually, I had 4 people reach out to me saying they wanted me to wear this purple jacket on your show today, and I do not want to disappoint them. So here we go. This is just for them, guys.
Oh, okay. We gotta get the camera low. We gotta see the whole jacket. Okay, perfect.
Yeah, there we go.
The jacket. This is the
lucky jacket
that make the stock go to $10. So Prad, I want to get into today's news, all the great stuff that's happening. Again, for anybody that's new to our live show, I know we get a lot of new people always jumping in. So what our live streams are about is we're looking for stocks which have that 10x to 100x upside potential. We've had a whole bunch of those stocks in the last year, anywhere from 10x to 20x. And now we're looking hopefully for the next 100x winner for 2021. And again, these companies have 3 things in common. Number one, they're going after multi-billion-dollar market opportunities, huge markets. They're at a key inflection point in their growth story. So things are about to take off, and they have multiple catalysts in place that can drive that value. So there's a lot of news flow, a lot of great things happening. And most importantly, they have a CEO that gets it. I think a lot of people agree that Prad definitely gets it when it comes to maximizing shareholder value. So with that said, Prad, I'm going to jump right into it. Skylight has been, you've been on a tear lately. The stock is rocketing, great volume. People are discovering the stock. You have this, great news today with the acquisition in Florida, which we're going to dive into. But for anybody that's new to the story, can you explain to them what exactly is Skylight doing in the U.S.? What is it? It's a $2 trillion, $3 trillion healthcare market. Like, what's your unique vision for this market? What's the opportunity that you see here?
Yeah, so Skylight Health, just for a quick overview again, we are a U.S.-focused healthcare services and technology company. So we are in the delivery of healthcare services through brick-and-mortar clinics, coupled with proprietary technology that we use to support the delivery of care, which includes things like telemedicine. You're right, this is a multi-trillion-dollar industry, Jack. Over 70% of the U.S. healthcare industry today is fragmented. And we're starting to see this huge opportunity for consolidation where individual doctors are starting to join these large health networks, but the health networks are ultimately somewhat failing in their delivery of quality care to patients and not really creating that exit for these doctors. And so what Skylight has done has built this infrastructure to be able to really capitalize on this consolidation play within the United States market, where we create this opportunity for doctors to exit to an organization that still maintains that autonomous physician-patient relationship, that community feel for patients, but brings that leverage of scale and size to each opportunity. And so we today have over 30 clinics, soon to be across 16 states in the US, over 130,000 patients rostered. Our goal is to get to 1 million patients and above. The opportunity for us as an organization is really sort of $1 billion revenue space within this $1 trillion industry, by working with payers, both government and commercial, and really seeing this opportunity for Skylight Health to become this strong, both consolidator, but also intrinsically growing the value of each of these clinics by way of expertise. I mean, we've done this for over 25 years, and where many have failed in the past, this is all we've done. And so, we're basically playing the same playbook here to a much larger marketplace.
Okay. So the bottom line is, I think, so your goal is to turn this into a $1 billion revenue business plus, $1 billion plus revenues.
I even think that's somewhat, unfairly capping it. I mean, if you look at, a large player in the U.S. today, like Oak Street Health, and they're still early in their model today. And 60 centers, a few 100,000 patients, and those guys are doing close to 800 million in revenue today, and they're going to cross $1 billion very shortly. So, for me, yeah, $1 billion is a good milestone to reach, but we're not going to stop. I certainly say that's the first milestone, but we're going to keep. And as we've always done as entrepreneurs in Skylight Health, we just keep raising the bar, and we're just going to keep raising the bar beyond that. So I'm very excited for being able to play in this space, because there's just such massive opportunities all around.
So Pride, what I want to, before we get into the whole business model, I think it's very important for people to kind of understand. I think what's unique is, it's a massive opportunity. There's a lot of companies in it, but I think the audience needs to kind of know a little bit about you and your background. How did you get it? Like, you've been in this business essentially, I think, your whole life, right? In healthcare.
Yeah. Without going to that point, but yeah, I certainly look. We both Cash and I mean, we've been business partners well before this company. We're like the yin and yang. The two of us just interrelate really well. And what's more important is that, we're not coming at this and saying, let's just try our feet in the healthcare industry. We're saying, no, we've been in the healthcare industry. We see the gaps. We know the opportunities. We understand the mistakes that people make. And it's part of the reason why our organization has one of the industry's highest gross profit margins, like 70-71%, and strong profitability margins. We know how to run profitable clinics. I started in this space back in pre-med, worked for medical practices, learned the business from the inside out, got a business degree, started opening up practices, worked with Cash to continue to expand that model, consulted for hundreds of doctors. And, the reality now is we're taking that experience and we're taking that playbook, and we're seeing this massive gap now. And it's very few times that you get to see this kind of opportunity to bring this expertise to a market opportunity that needs this type of disruption. And I think the two put together, you're right, we're at an inflection point now. We spent the last 4 years building this infrastructure, and now we're starting to recognize that growth, both by way of acquisition, but also organically.
Okay, so basically, you're doing this for a long time. I think it's very important, 'cause again, in this space, there's always like groups who are trying to consolidate an industry, whatever. There's always in any industry, right? But there's a difference between, like, the execution is the key, right? So it's like, and you've been doing this a whole long time. So I think it's you've reached the point of there's a certain point where what is it? It's 10,000 hours before somebody achieves mastery. I think that was the famous. Do you have 10,000 hours in healthcare?
I think I have more than 10,000 hours in healthcare. Yeah.
So you've achieved mastery. So now you're ready to really scale this up. So the question, I think we want to focus on, what it all comes down to is, for investors, is how far can you scale this and how fast? And I think they're focused on how fast, because they want this thing to be $20 by next Tuesday at 11 a.m. and $50 billion in revenues, maybe by Friday. So how far can you scale and how fast?
How far can we scale? There's no stopping. This goes well beyond $1 billion in revenue opportunity. So how far can we go? This can go a long way. When we started even looking at the consolidation opportunity, we were at $10 million in opportunities 2 months ago. Today, we're over 75 million in opportunities. And I'm pretty sure that by the time we reach the end of this year, we'll be well over 100. So this is a never-ending site. There's just so much to be had here. How fast do we go? Arguably, I think we've been going pretty quick so far. The last 2 months, we've already announced 5 transactions, 80% growth in 2021 compared to this year. And there's no reason why that's not going to hit 100% plus, just based on the fact that I know what's in our pipeline. I see it. Our teams are in diligence. And I'm not even talking about organic growth opportunities. I mean, we don't even talk about that sometimes enough. I mean, the fact that on a unit economic basis, we're $150 a year per patient today, and we're going to get that up to 4 visits a year, which could be $1,000 a patient per year. That's a 10x return on revenue without doing any further acquisitions at all. And that's just a simple execution of a flip of a switch. And so there's the speed at which we're going to start moving. I think I said this back in one of our earnings calls back in Q2, like, we are going on the offensive. And when I say that, we mean that. I have a strong team behind me that's just sprinting at full speed. We continue to strengthen our management team with every acquisition, and we're just getting better and faster.
Okay, so we're gonna get into the acquisitions, the whole growth strategy, but I think we should first talk about the foundation. So the foundation that you have for this, this juggernaut is really like your kind of like the secret sauce, the secret recipe, which is, I guess, is how do you, increase the revenues by 10x organically when you take on a new acquisition. So explain that.
The reason I had a job in clinical practice management, and I say this with all good intentions, is we understand the business better than sometimes doctors understand the business. And we make great business managers. And when we used to go into practices, we were called in because there was a problem, and we knew exactly where to focus. We knew how to drive profits. We knew how to drive revenues, and we would do that time and time again. And so when we walk into these clinics that we look at from an acquisition perspective, there is a lot of opportunity to capture more value. And that does tremendously well for the patient, by the way, because all of this means more services, more care, more attention around the patient's needs. Just as an example, on Tuesday, we put out a press release about a partnership that we now have with a company for remote patient monitoring for hypertension patients, right? And I'll take a minute here just to explain what that is. So, imagine this. Now we have a patient with hypertension where Skylight's now going to purchase this blood pressure machine, give it to the patient to take home. And they're going to take their reading at home. They don't have to drive to the pharmacy anymore to get it. And they can take it 16 days a week, a month, or longer. And all that data gets fed back to us, and our nurse monitors it. And if there's something that doesn't look right, well, now we can reach out to the patient proactively. And so this is about saving lives. It's about making people better. By virtue of doing that, that monitoring that we provide can earn up to $2,000 a year per patient. Okay, I'm just going to put this into context. There are about 25% of patients in just our Washington clinic alone that could benefit from this program. If we assume just 5%, small component, okay, that's out of 10,000 patients, 500 people at $2,000 a year, that's $1 million revenue opportunity. When we acquired Washington, they were doing 700,000. So this is one example of the type of revenue drivers we can bring that'll benefit patients, but would have doubled on just that small sample size alone. And now take that same model, apply it to the rest of your practices across the US. We have 130,000 patients, and across other types of remote patient monitoring tools in other disease states. Again, our model is built to overlay complementary services to an existing patient base where the patient sees more value in having this care delivered, and we benefit from the increased insurable billings that we get to do. You're right, there's a bit of a secret sauce to this, and it's not so much about the idea, it's about the years of experience to know how to execute it. And that's what I'm really proud about our team, that we bring those years of experience to be able to do this successfully.
Okay, so we got the model in place. We got the secret sauce now. Well, how much are you doing in revenues right now? Let's kind of update people. You have the new. Okay, so let's just talk about the new acquisition you announced today, and then we'll kind of bring up the run rate. We'll bring it up to date. But so today you announced you are acquiring a clinic in Florida, which is what? That's your 16th market now. You're in your 16th state.
Markets. Yeah, that's correct.
Okay, and how big is this deal? Give us kind of the details on it, and then in the context of where you are now.
Yeah. So first of all, I just want to highlight how accretive this one transaction is for us, and I say that because this deal comes with such a I get sort of excited when I talk about this, but the management team in this company is just so phenomenal. Like what they've achieved in 3 years with this one business. Now, it's not a primary care focus. They actually have more of a wellness and allied health focus. But the overlay that they've been able to prove that this model has for a patient with primary care is phenomenal. And actually, what I'm really excited about is this founder is just getting started. So when we looked at this transaction, he didn't want to sell. He was looking for a partner. He wants to scale, and he wants the infrastructure to scale. And so what we are bringing to complement what he is looking to do is to effectively say, I'm not done Florida yet. There's more to be had, and I just need help getting there. And so there's going to be more growth organically in Florida. But the value he brings to then leverage what he has done successfully in Florida across our other 15 markets think about what value that can have to the patients within those clinics. And ultimately, if he can replicate that revenue model in each of those states, it's phenomenal. So it's a highly accretive deal. And it's one of those pieces that adds on to the strength of our management team, adds on to the strength of our services that we offer to patients. The deal itself, I mean, the group has done, they'll do about $5 million in revenue and about $1.2 million in profit. So again, every deal we focus on is profitable from day one. We're paying about 4 times EBITDA multiple. So we're looking at about a $4.8 million transaction value here. But again, the beauty of this is 50% cash and 50% stock. But the stock is vested over 2 years. And so there's a strong need for alignment in terms of getting the value for both sides out of this. We both win. And from a cash component, it still leaves us with a significant amount of dry powder. This transaction actually maybe touches on all of the funds raised in the first tranche that we did in September. I haven't even started touching the second tranche of capital that we just did back in October. So we're still left with a lot of capital here to deploy. But the value, again, that this deal brings is, of course, strong top line growth, immediate accretive value to the bottom line profitability, but the excitement behind the team and what they're going to be able to do in Florida, but also in our other states.
Okay, so the guy behind this clinic essentially adds to like the secret formula, the recipe here. I guess it's the operational expertise, like this model. You can scale this model to your whole company.
Yeah, it's more than just the provider. It's about, the playbook's about the patient acquisition strategy, the retention strategy, the materials, the training, the getting that high net promoter score, making sure that patients come back time and time again, and about building those referral strategies that ultimately drive that kind of patient volume into a practice like this. And so there's so much around just the clinic itself when we acquire these things that we look for these types of, call it expertise. It's not that we don't have it, but sometimes rather than building it up again from the beginning, you can have a model that's already so succcial.
Like let's just use McDonald's as a business model. I mean, very similar, right? I mean, the guy bought, I think it was Ray Kroc, right? He bought McDonald's because this guy sold milkshakes, and he said, wow, this one place is, they're buying 10 milkshake maker machines and nobody else. I mean, because they had this incredible business model. They were tremendous operators. These guys really had like this. It wasn't about the burgers, none of that. It was just that expertise. And he said, wow, this is great. And we could, and the rest is history. That became, massive. So essentially now you have an extra McDonald's in your formula. A little bit. I'm not using the right.
That's fine. Yeah. We have an extra McDonald's in our formula. Love it.
Okay, perfect. So right now you are at, okay, so with this is at 5 million. So the run rate right now is how much?
So we're going to do about 26 million next year. 26 million top line, and close to about 2 to 3 million on EBITDA. And I say that again, as we continue to look to keep beating that out. I mean, last month we were at 21 million, and the analysts had us that as part of their model for next year. Now they've all sort of repriced and upgraded their targets and moved it up to sort of, $1.60, $1.70. And again, I look at that and say, great, I'm happy that you're providing guidance from a perspective of what we have, and that's perfectly fine, because on that alone, it's 80% above last year's revenue. And, again, building a profitable base of business. But I see what's in the pipeline, and I know what's coming, and I can say with full confidence that we're going to be surpassing that. So just keep executing and keep putting news out.
So okay, so I think the main thing for investors really to focus on is it's not what's in the past, but what's in the future. So okay, so the growth really is kind of a constantly moving target right now. You're at 26 million now run rate, which is increasing. I mean, by February might be 50. I mean, in theory, it could be 50 million run rate. I don't know. Could it?
Could be. Okay. I know what's cooking. Look, I like to always tease a little bit, right? And I will say, we have a couple of 8-figure transactions that we're working on, and they're transformative. I'll leave it at that.
Okay, so that's the thing we're looking for. Again, with the platform, the next Superstock platform, we're looking for, catalysts that have, transformative catalysts for companies. So, and you mentioned you have, when you first were on, was it last week, you had 50 million of potential deals in the pipeline, potential deals. Now it's 75 million potential deals. So, obviously things are progressing. And, look, what I find in this business, once you're on a roll, once you have momentum, success breeds success. Once, people in the industry find out what's going on, it snowballs. You have a snowball. So you could really go from, in theory, why not 500 million? It might be,
why not? I don't even think our pipeline takes that long to get there. I mean, I think our pipeline continues to build. We are solidifying relationships. Look, we've worked with brokers, and one thing that they're realizing is we're committed. I mean, we're not wasting their time. We're not wasting their clients' time. They bring us deals. We like the deals. We move quick. We have a good due diligence process. It's easy for everybody to understand. We close our deals. And that just makes them feel like they want to bring us more. And that's why we're continuing to see such a growth in deal pipeline. And even sometimes before deals even hit the market, because again, they know that they're going to be showing a deal to a group that understands what they're doing, provides comfort to their seller, and will ultimately stand by their word, which is, if we like the deal, we're going to get it done.
Okay. Oh, okay. So this is something very interesting. We haven't talked about this. Okay. So the M&A is a key part of your strategy, right? The growth strategy, right? So how do you get the deal flow? What is, what's the criteria? I think what you mentioned now is very important, right? So if you're in the market, right, you have guys bring you deals, broker. There's investment bankers. There's guys constantly bring you deals, right? So if you have a reputation as a guy who actually closes, and fast, people love that.
Mm-hmm.
I mean, that's the worst thing. That nobody wants to waste time. Doctors, they don't want to waste, 3 months, 6 months on due diligence, waste, money on, lawyers, accountants, all that stuff. And then the deal doesn't close with, some private equity firm, right? Because that's what these guys, they reprice the deal. They don't want to, if they know the guy has a reputation for closing, as agreed, it becomes, that word spreads like wildfire.
Yeah, and again, we can move quicker because we know what we're looking at. I mean, we look at the due diligence rooms, we look at these organizations, and right away we can say yes or no. And if it's a yes, then it's okay. Well, now let's dig deeper. But our ability to identify targets that we understand have good intrinsic value, but also have the accretiveness to build further within our model, that's I think what sets us apart when we look at these deals. And we've got a number of brokers that are on both the buy side and sell side, and we're going to keep. I think we're just going to keep building good relationships, because ultimately that's what's going to yield, I think, long-term value for both people, including the sellers.
Okay. So let's jump. We're going to jump into some audience questions. If you guys have some questions, again, it's your questions that make these events special. So please, throw out some questions here. We're gonna jump into those in just a second. I'm going to ask you one last question here before we get. Okay. So we talk. Okay. What's right now? What's the competitive landscape like in terms of the markets here, but also from the M&A side? Who are you competing with? Why are they? Yeah, I guess you kind of touched on it, but why are they choosing to go with you? What's your edge? What's the whole?
Yeah. So there's kind of two main competition. First competition are your legacy big hospital networks, and at the end of the day, it's great, it's fine, it serves its purpose, but you become 1 in a million patients in that big building. And a lot of practices recognize that when they make that move, they're losing their autonomy of practice. They're losing potentially that ownership and care of the patient. And they're becoming part of, Unit 204 in this large medical building. When we come in, we maintain the image, we maintain the brand, we maintain that practitioner autonomy, we maintain that patient culture. And so there's a lot to be said about the quality of the buyer. And I think that's one thing that sets us apart in that component. And that's why we've won a couple of deals away from the health networks. The second type of
the culture is a big part of it. That's a big part of it. Yeah, it's probably a huge part of it because, at the end of the day, these guys are doctors, right? I mean, they're kind
medicine's personal. Medicine's personal. You go to your doctor because you trust them. That's why you go. You go there because you trust the staff. You go there because, you know the place, you know the environment, you feel safe. Right?
Yeah.
And then the second component would be private equity. And private equity has been trying to do this for a long time, rolling up primary care practices. And it hasn't been successful in a lot of ways because, frankly, they're not healthcare operators. But I used to think of private equity as competition. Now I see them as potential customers, because what we're starting to find now within our deal pipeline is these private equity groups that have started to build these practices realize they're not in the business of healthcare medicine and are now looking for an exit, and Skylight's an exit. So we're starting to actually look at deal flow coming from private equity groups as well. So I think it's a closed circle, and I think we're starting to see it come back around again.
Okay, let's go to let's start with the first question here. Derek is asking, how often do you think acquisitions into new states will take place? I guess he's asking about the velocity of deal flow. So 2, since your WSR debut is great, will you keep the pace? Will you accelerate the pace, is the question.
So I think we want to look at acquisition pipeline in terms of size of acquisitions. And so we've announced numerous acquisitions in the last 2 months, smaller deals, sort of 2 million under. This was our largest one so far. And we'll certainly find those hidden gems that we want to still continue to capture. But we're also looking at larger transactions. Like I said, a few now that are in sort of that 8-figure revenue model. And when we look at those deals, you may not see the same frequency because they're much larger, but the contribution that each of those deals bring would be an equivalence of, say, doing 4 or 5 smaller deals. So I have no doubt that we're going to aggressively close that gap on our pipeline opportunities to what we currently own. But we're also looking at larger transactions because we are becoming a more legitimate player in the US market. And that means that we want to keep building at scale and having better management teams. And a lot of these larger systems bring that kind of infrastructure as well as the business to us.
Okay, so if you're saying you have potential 8-figure type acquisitions in the pipeline, 8 figures to me means $10 million plus, right? If I'm doing my math.
Yeah, that's right.
Yeah, school. Yeah. Okay, so 10 million plus, and that is before you add the secret recipe to turbocharge it. So potentially these $10 million acquisitions can generate $100 million in revenues. Over the course. They can hit that run rate, I don't know, by 10 months out, whatever it is. Is that how it works?
We always want to focus on that 10x growth. I mean, that's key. That's so critical, right? So what are they missing? What are they not utilizing? Let's bring it there as fast as we can. Let's get those patients to benefit from it, and then let the company benefit from the billings on those.
Okay. Robert's asking, how many patients would be added with a Florida acquisition?
Yeah, so this is one of the things that we kept out of this press release, primarily because there's some confidentiality behind the disclosure of the Florida group. But it is, I would say, it's pretty much in line with typically the other kind of acquisition sizes we've done. But we'll announce that exact number on the signing and closing of the agreement.
Okay. John's asking, how would universal healthcare in US affect your business model?
We have been brought up in a universal healthcare system. So we know this model fully. Like, I recognize the benefits of a single payer system. I recognize the benefits of a capitated model. I love the fee-for-service model. I recognize why that's good and how you optimize that. The beauty of having the expertise behind this company is that we have worked across a whole suite of healthcare systems in multiple countries. And this allows us the opportunity to take the best out of each of the different platforms. So if tomorrow we move to a single payer system, we move to a managed care model, we understand how to optimize clinician time, maximize those gross profit margins, create more value so that ultimately we're seeing more growth. So again, I'm good either way. Whichever way we go, we're prepared to be able to handle that growth.
Okay. We got a question about the market cap. Maybe why don't we touch on, fully diluted, like after this deal, everything else, what's going to number of shares out, market cap, and let's talk about comps, across the space. How do you compare with some companies in the space right now?
Yeah, so fully diluted, I mean, I think we're about 180 million or 189 million shares. Currently issued and outstanding is about 160 million. So we're certainly trading much better than we were before. We're trading at about a 6 to 7 times EV to sales for 2021. And again, I think that's relatively, undervalued just based on the growth that we know is coming down the pipeline. The median average, I think, now is between 15 to 20 times EV to sales. So there's automatic exposure for improvement with shareholder value just based on closing that gap. And as we can see, execution over the last 60 days, focus back on growth. We're being rewarded for growth. And we now have 2 new analysts covering the story. Last time I was on, I think we just had the 1 analyst. And those price points are continuing to be increased every time we execute against our business plan. And so I think continued exposure, attaining that goal for the $1 billion mark, proving out our model quarter over quarter, we'll continue to see that analyst expectation growth. So I think overall we'll see a closing gap to our median peers, but we're also going to see a growth because we're going to be adding fundamental revenues and profits to the business.
Okay, so the bottom line, the stock, if it would be trading like your peers, which is, I guess, what is it, One Medical or Oak Street?
Yeah, One Medical, Oak Street Health. Yeah, great comparables.
It basically should be $3 right now, based on
in equivalence, correct?
Peer group, okay. And of course, as your revenues, expand, everything else, you're looking to get that 15x revenues that these guys have.
Yeah, 6 months ago, we did not have growth factored into our model. And for all good purposes, we were focused on getting profitable. That was our #1 goal last year. And this year, we got there. Now it's all about going and getting that top line growth while growing profitability at the same time. And now that we're focusing back on growth, and again, we're already 80% above this year on the exit run rate, we're going to hit 100% and we're going to keep going. And I think we'll just keep getting rewarded for growth. And as we continue to perform, that's key. It comes down to execution. We're operators. We know how to do this. And so as we continue to execute, I expect to continue to see that valuation gap close, but also grow by virtue of just getting the business to continue to expand.
Okay. PG Smith asking, when will you be profitable? When do you turn profits?
We're already profitable. So we just reported Q3. This is historical for us. This is our first year that we are year to date positive. And so we're not burning any cash. We're in a good position today. We're actually adding positive cash flow. If you look at every one of our acquisitions, it is immediate contribution to the bottom line. And so we are building profitability with every acquisition. While we continue to make investments, of course, that's always key. We don't want to focus that profitability as a #1 marker for us, but it is important to recognize that we do see us needing to be sustainable as we grow, but let's grow fast and let's grow hard as well. And so that's the 2 things can exist together. And I think we're proving that out.
Okay. Lottie's Full House is asking, can we get some color on the data side, CRO deals, clinical trial with GL brands?
Yeah, so a number of the trials that were previously announced with the company, we're still ongoing with them. Some of the trials in the US had to take a pause because of COVID and patient recruitment couldn't continue. On the data side, look, we're piloting projects in the UK, in Canada. They're still functioning. In fact, they're probably expanding in scope now. So we've actually increased on our billings on those services. There's a couple of deals to come now that will continue to validate that side of the business. What's really exciting now is that we're getting a chance to participate because of the broadened exposure in healthcare on more traditional style clinical trials, which we know are at significantly higher volumes in the US market, over hundreds of trials going on at any given point in time. And so now, we're through a 2nd stage review on a diabetes trial. We're looking across, applied for a few proposals into the COVID-19 trials. And so, again, having the physical footprint of clinics, having the technology to be able to identify patients quickly for trials really puts us at a high competitive advantage here. And we're working across a multitude of different proposal applications to continue to build that volume of pipeline. And as they start to close, we'll start to bring those to the market as well.
Okay, so that's I guess another one of those revenue streams that you have. You have these multiple revenue
on average $500 to $5,000 per patient recruited into a trial. So it is a meaningful revenue once it starts to hit critical mass.
Okay, so yeah, I think these things add up quickly here, especially. And you have now you're going to have you have 130,000 patients growing. Okay,
yeah, more with Florida, but yeah.
So Alex is asking, do you have a target percentage or projection of currently rostered patients you think you'll convert to utilizing insurable services in 2021?
Mm-hmm. So when we started this model a year and a half ago now, we did a survey, and well over 50% of the patients were in strong support of this, which is why we saw the strong demand to get here. I anticipate that will grow more. Most patients don't understand typically until they see it in action. So at minimum, we're talking 50%. We know that approximately 75% of our patients are insured patients. And so we're looking between that 50 to 75%, and we'll convert them over the course of the year. So we're starting to open up clinics again, starting in Q1, with the purpose of being able to bring these patients in so that by in the next 12 months, all of these centers are offering in full scale primary care to these patients. And we're at a good pace of capacity to be able to convert them organically. And like I said, just even a 10% conversion is almost a $5 to $6 million improvement organically without doing anything else on the low end.
Okay, so that's pretty good. Okay, so let's see. Okay, so we got okay. I want to kind of I know you're busy today, so I want to wrap up. I want to ask you two last questions, Pride, which is in terms of I guess what kind of milestones, what else do you have in the hopper in terms of news flow that we can expect over the next 6 weeks? Right now, we're getting into the last weeks of December, the slow period in theory.
Yeah, so there are more deals cooking. I don't want to say more than that, but there are more deals cooking. I've hinted at how big some of these deals can be, and I think that's going to be transformative. I really do. We're still announcing organic news. GatherMed was organic. Conversion of existing patients is organic. And when you realize the revenue potential that a single platform like GatherMed can bring to a national patient base, it could be tens of millions of dollars. And this is what's really exciting right now. And the fact that we can play on both the organic side and the acquisition side simultaneously, driving value together, that's what gets us up every day, and in fact doesn't let us sleep at night. We're so excited.
Okay, Pride, last question. This is our favorite here at Wall Street Reporter. Yeah, I can't end without asking this, even though I ask this every time. In your opinion, top 3 reasons why investors should consider Skylight Health stock today.
Number 1, we are at a significant inflection point. Profitable base of operations, no debt, strong balance sheet, and a high growth pipeline of acquisition targets and organic growth opportunities. We are just getting started. Number 2, management. We've done this before. We have a solid team built around us, and we are executing and proving ourselves as we have done in the past. And number 3, just continued value for shareholders. For every dollar we deploy, we get 3 back on deals like this. The immediate accretion to shareholders combined with a closing gap in valuation is going to lead to some significant return. And we continue to strengthen our institutional shareholder base, continue to expand on more research coverage. From a capital markets perspective, I think we have engagement. When you couple engagement with business opportunity, with good management, I think you have the perfect storm.
Excellent. Pride, on that note, I want to thank you. Thank you, everybody, for joining our live stream today. And hopefully we'll have you back very shortly with some more updates and good news.